Internal Revenue Service. The Internal Revenue Service, IRS, is the revenue service for the United States federal government, which is responsible for collecting taxes and administering the Internal Revenue Code, the main body of the federal statutory tax law. It is part of the Department of the Treasury and led by the Commissioner of Internal Revenue, who is appointed to a 5-year term by the President of the United States. The duties of the IRS include providing tax assistance to taxpayers, pursuing and resolving instances of erroneous or fraudulent tax filings, and overseeing various benefits programs, including the Affordable Care Act. Internal Revenue Service Building on Constitution Avenue in Washington, D.C. IRS Building in Washington, D.C. IRS Location Sign on Constitution Avenue, Washington, D.C. The IRS originates from the Commissioner of Internal Revenue, a federal office created in 1862 to assess the nation's first income tax to fund the American Civil War. The temporary measure provided over a fifth of the Union's war expenses before being allowed to expire a decade later. In 1913, the 16th Amendment to the U.S. Constitution was ratified authorizing Congress to impose a tax on income, and the Bureau of Internal Revenue was established. In 1953, the agency was renamed the Internal Revenue Service, and in subsequent decades underwent numerous reforms and reorganizations, most significantly in the 1990s. Since its establishment, the IRS has been responsible for collecting most of the revenue needed to fund the federal government, albeit while facing periodic controversy and opposition over its methods, constitutionality, and the principle of taxation generally. In recent years the agency has struggled with budget cuts and reduced morale. As of 2018, it saw a 15% reduction in its workforce, including a decline of more than 25% of its enforcement staff. Nevertheless, during the 2017 fiscal year, the agency processed more than 245 million tax returns. American Civil War, 1861-65. George S. Boutwell was the first Commissioner of Internal Revenue under President Abraham Lincoln. In July 1862, during the American Civil War, President Abraham Lincoln and Congress passed the Revenue Act of 1862, creating the Office of Commissioner of Internal Revenue and enacting a temporary income tax to pay war expenses. The Revenue Act of 1862 was passed as an emergency and temporary wartime tax. It copied a relatively new British system of income taxation, instead of trade and property taxation. The first income tax was passed in 1862. The initial rate was 3% on income over $800, which exempted most wage earners. In 1862 the rate was 3% on income between $600 and $10,000, and 5% on income over $10,000. By the end of the war, 10% of Union households had paid some form of income tax, and the Union raised 21% of its war revenue through income taxes. Post-Civil War, Reconstruction, and popular tax reform, 1866 to 1913. After the Civil War, Reconstruction, railroads, and transforming the North and South war machines towards peacetime required public funding. However, in 1872, 7 years after the war, lawmakers allowed the temporary Civil War income tax to expire. Income taxes evolved, but in 1894 the Supreme Court declared the income tax of 1894 unconstitutional in Pollock v. Farmers Loan and Trust Company, a decision that contradicted Hilton v. United States. The federal government scrambled to raise money. In 1906, with the election of President Theodore Roosevelt, and later his successor William Howard Taft, the United States saw a populist movement for tax reform. This movement culminated during then-candidate Woodrow Wilson's election of 1912 and in February 1913, the ratification of the 16th Amendment to the United States Constitution. The Congress shall have power to lay and collect taxes on incomes, from whatever source derived, without apportionment among the several states, and without regard to any census or enumeration. This granted Congress the specific power to impose an income tax without regard to apportionment among the states by population. By February 1913, 36 states had ratified the change to the Constitution. It was further ratified by 6 more states by March. Of the 48 states at the time, 42 ratified it. Connecticut, Rhode Island, and Utah rejected the amendment. Pennsylvania, Virginia, and Florida did not take up the issue. Post-16th Amendment, 1913 present. Though the constitutional amendment to allow the federal government to collect income taxes was proposed by President Taft in 1909, the 16th Amendment was not ratified until 1913, just before the start of the First World War. In 1913 the first edition of the 1040 form was introduced. A copy of the very first IRS 1040 form can be found at the IRS website, showing that only those with annual incomes of at least $3,000, equivalent to $82,300 in 2021, were instructed to file the income tax return. In the first year after the ratification of the 16th Amendment, no taxes were collected. Instead, taxpayers simply completed the form and the IRS checked the form for accuracy. The IRS's workload jumped by tenfold, triggering a massive restructuring. Professional tax collectors began to replace a system of patronage appointments. The IRS doubled its staff but was still processing 1917 returns in 1919. Income tax raised much of the money required to finance the war effort. In 1918 a new Revenue Act established a top tax rate of 77%. People filing tax forms in 1920. In 1919 the IRS was tasked with enforcement of laws relating to prohibition of alcohol sales and manufacture. This was transferred to the jurisdiction of the Department of Justice in 1930. After repeal in 1933, the IRS resumed collection of taxes on beverage alcohol. The alcohol, tobacco and firearms activities of the Bureau were segregated into the Bureau of Alcohol, Tobacco, Firearms and Explosives in 1972. A new tax act was passed in 1942 as the United States entered the Second World War. This act included a special wartime surcharge. The number of American citizens who paid income tax increased from about 4 million in 1939 to more than 42 million by 1945. In 1952, after a series of politically damaging incidents of tax evasion and bribery among its own employees, the Bureau of Internal Revenue was reorganized under a plan put forward by President Truman, with the approval of Congress. The reorganization decentralized many functions to new district offices which replaced the collectors' offices. Civil service directors were appointed to replace the politically appointed collectors of the Bureau of Internal Revenue. Not long after, the Bureau was renamed the Internal Revenue Service. In 1954 the filing deadline was moved from March 15 to April 15. The Tax Reform Act of 1969 created the alternative minimum tax. By 1986, limited electronic filing of tax returns was possible. The Internal Revenue Service Restructuring and Reform Act of 1998, RRA 98, changed the organization from geographically oriented to an organization based on 4 operating divisions. It added 10 deadly sins that require immediate termination of IRS employees found to have committed certain misconduct. Enforcement activities declined. The IRS Oversight Board noted that the decline in enforcement activities has raised questions about tax compliance and fairness to the vast majority of citizens who pay all their taxes. In June 2012, the IRS Oversight Board recommended to Treasury a fiscal year 2014 budget of $13.074 billion for the Internal Revenue Service. On December 20, 2017, Congress passed the Tax Cuts and Jobs Act of 2017. It was signed into law by President Trump on December 22, 2017. In the 2017 fiscal year, the IRS had 76,832 employees conducting its work, a decrease of 14.9% from 2012. Presidential tax returns, 1973. From the 1950s through the 1970s, the IRS began using technology such as microfilm to keep and organize records. Access to this information proved controversial when President Richard Nixon's tax returns were leaked to the public. His tax advisor, Edward L. Morgan, became the 4th law enforcement official to be charged with a crime during Watergate. John Ricard Jr., accused of leaking the Nixon tax returns, collected delinquent taxes in the slums of Washington. In his words, "We went after people for nickels and dimes, many of them poor and in many cases illiterate people who didn't know how to deal with a government agency." Ricard admitted that he saw the returns, but denied that he leaked them. Reporter Jack White of the Providence Journal won the Pulitzer Prize for reporting about Nixon's tax returns. Nixon, with a salary of $200,000, paid $792.81 in federal income tax in 1970 and $878.03 in 1971, with deductions of $571,000 for donating vice presidential papers. This was one of the reasons for his famous statement, "Well, I'm not a crook. I've earned everything I've got." So controversial was this leak, that most later U.S. presidents released their tax returns, though sometimes only partially. These returns can be found online at the Tax History Project. Computerization, 1959 present by the end of the Second World War, the IRS was handling 60 million tax returns each year, using a combination of mechanical desk calculators, accounting machines, and pencil and paper forms. In 1948 punch card equipment was used. The first trial of a computer system for income tax processing was in 1955, when an IBM 650 installed at Kansas City processed 1.1 million returns. The IRS was authorized to proceed with computerization in 1959, and purchased IBM 1401 and IBM 7070 systems for local and regional data processing centers. The Social Security number was used for taxpayer identification starting in 1965. By 1967, all returns were processed by computer and punched card data entry was phased out. Information processing in the IRS systems of the late 1960s was in batch mode. Microfilm records were updated weekly and distributed to regional centers for handling tax inquiries. A project to implement an interactive, real-time system, the Tax Administration System, was launched, that would provide thousands of local interactive terminals at IRS offices. However, the General Accounting Office prepared a report critical of the lack of protection of privacy in TAS, and the project was abandoned in 1978. In 1995, the IRS began to use the public internet for electronic filing. Since the introduction of e-filing, self-paced online tax services have flourished, augmenting the work of tax accountants, who were sometimes replaced. In 2003, the IRS struck a deal with tax software vendors. The IRS would not develop online filing software and, in return, software vendors would provide free e-filing to most Americans. In 2009, 70% of filers qualified for free electronic filing of federal returns. According to an Inspector General's report, released in November 2013, identity theft in the United States is blamed for $4 billion worth of fraudulent 2012 tax refunds by the IRS. Fraudulent claims were made with the use of stolen taxpayer identification and Social Security numbers, with returns sent to addresses both in the U.S. and internationally. Following the release of the findings, the IRS stated that it resolved most of the identity theft cases of 2013 within 120 days, while the average time to resolve cases from the 2011-2012 tax period was 312 days. In September 2014, IRS Commissioner John Koskinen expressed concern over the organization's ability to handle Obamacare and administer premium tax credits that help people pay for health plans from the health law's insurance exchanges. It will also enforce the law's individual mandate, which requires most Americans to hold health insurance. In January 2015, Fox News obtained an email which predicted a messy tax season on several fronts. The email was sent by IRS Commissioner Koskinen to workers. Koskinen predicted the IRS would shut down operations for 2 days later this year, which would result in unpaid furloughs for employees and service cuts for taxpayers. Koskinen also said delays to IT investments of more than $200 million may delay new taxpayer protections against identity theft. Also in January 2015, the editorial board of the New York Times called the IRS budget cuts penny wise and pound foolish, where for every dollar of cuts in the budget, 6 were lost in tax revenue. History of the IRS name. IRS and Department of the Treasury seal on lectern. As early as the year 1918, the Bureau of Internal Revenue began using the name Internal Revenue Service on at least one tax form. In 1953, the name change to the Internal Revenue Service was formalized in Treasury Decision 6038. Current organization. The 1980s saw a reorganization of the IRS. A bipartisan commission was created with several mandates, among them to increase customer service and improve collections. Congress later enacted the Internal Revenue Service Restructuring and Reform Act of 1998. Because of that act, the IRS now functions under 4 major operating divisions: Large Business and International, Pound and I, Small Business/Self-Employed, SB/SE, Wage and Investment, W&I, and tax-exempt and government entities, TAE/GE. Effective October 1, 2010, the name of the Large and Midsize Business Division was changed to the Large Business and International, &I, Division. While there is some evidence that customer service has improved, lost tax revenues in 2001 were over $323 billion. The IRS is headquartered in Washington, D.C., and does most of its computer programming in Maryland. It currently operates 5 submission processing centers which process returns sent by mail and returns filed electronically via e-file. Different types of returns are processed at the various centers, with some centers processing individual returns and others processing business returns. Originally, there were 10 submission processing centers across the country. In the early 2000s, the IRS closed 5 centers: Andover, Massachusetts, Holtsville, New York, Philadelphia, Pennsylvania, Atlanta, Georgia, and Memphis, Tennessee. This currently leaves 5 centers processing returns: Austin, Texas, Covington, Kentucky, Fresno, California, Kansas City, Missouri, and Ogden, Utah. In October 2016, the IRS announced that 3 more centers will close over a 6-year period: Covington, Kentucky in 2019, Fresno, California in 2021, and Austin, Texas in 2024. This will leave Kansas City, Missouri and Ogden, Utah as the final 2 submission processing centers after 2024. The IRS also operates 3 computer centers around the country, in Detroit, Michigan, Martinsburg, West Virginia, and Memphis, Tennessee. Commissioner? The current IRS Commissioner is Charles P. Reddick of California. There have been 48 previous Commissioners of Internal Revenue and 28 acting Commissioners since the agency's creation in 1862. From May 22, 2013 to December 23, 2013, Senior Official at the Office of Management and Budget Daniel Verfel was Acting Commissioner of Internal Revenue. Verfel, who attended law school at the University of North Carolina and attained a master's degree from Duke University, prepared the government for a potential shutdown in 2011 by determining which services that would remain in existence. No IRS commissioner has served more than 5 years and 1 month since Guy Helvering, who served 10 years until 1943. The most recent commissioner to serve the longest term was Doug Shulman, who was appointed by President George W. Bush and served for 5 years. Deputy Commissioners. The Commissioner of Internal Revenue is assisted by 2 Deputy Commissioners. The Deputy Commissioner for Operations Support reports directly to the Commissioner and oversees the IRS's integrated support functions, facilitating economy of scale efficiencies and better business practices. The Deputy Commissioner for Operations Support provides executive leadership for customer service, processing, tax law enforcement and financial management operations, and is responsible for overseeing IRS operations and providing executive leadership on policies, programs and activities. The Deputy assists and acts on behalf of the IRS Commissioner in directing, coordinating and controlling the policies, programs and activities of the IRS, in establishing tax administration policy, and developing strategic issues and objectives for IRS strategic management. The Deputy Commissioner for Services and Enforcement reports directly to the Commissioner and oversees the 4 primary operating divisions responsible for the major customer segments and other taxpayer-facing functions. The Deputy Commissioner for Services and Enforcement serves as the IRS Commissioner's essential assistant, acting on behalf of the Commissioner in establishing and enforcing tax administration policy and upholding IRS's mission to provide America's taxpayers top-quality service by helping them understand and meet their tax responsibilities. Office of the Taxpayer Advocate. The Office of the Taxpayer Advocate, also called the Taxpayer Advocate Service, is an independent office within the IRS responsible for assisting taxpayers in resolving their problems with the IRS and identifying systemic problems that exist within the IRS. The current head of the organization, known as the United States Taxpayer Advocate, is Aaron M. Collins. Independent Office of Appeals. The Independent Office of Appeals is an independent organization within the IRS that helps taxpayers resolve their tax disputes through an informal, administrative process. Its mission is to resolve tax controversies fairly and impartially, without litigation. Resolution of a case in appeals could take anywhere from 90 days to a year. The current chief is Donna C. Hensberry. Office of Professional Responsibility, OPR investigates suspected misconduct by attorneys, CPAs and enrolled agents, tax practitioners, involving practice before the IRS and has the power to impose various penalties. OPR can also take action against tax practitioners for conviction of a crime or failure to file their own tax returns. According to former OPR Director Karen Hawkins, the focus has been on roadkill, the easy cases of tax practitioners who are non-filers. The current acting director is Elizabeth Kasenberg. Criminal investigation, see Internal Revenue Service. Criminal investigation, IRSC, is responsible for investigating potential criminal violations of the U.S. Internal Revenue Code and related financial crimes, such as money laundering, currency violations, tax-related identity theft fraud, and terrorist financing that adversely affect tax administration. This division is headed by the Chief, Criminal Investigation appointed by the IRS Commissioner. Programs: Volunteer Income Tax Assistance, VITA, and Tax Counseling for the Elderly, TARAS, are volunteer programs that the IRS runs to train volunteers and provide tax assistance and counseling to taxpayers. Volunteers can study e-course material, take tests, and practice using tax preparation software. Link and Learn Taxes, searchable by keyword on the IRS website, is the free e-learning portion of VITA/TARAS program for training volunteers.